Ladies and gentlemen, welcome to the SoFi Weekly Podcast. Today, I am joined by Roy, which should be over here, Tevis, and maybe there's a special guest that's popping in later. But how you guys doing? How you doing, Roy?
Doing all right. Been an eventful week as always.
Yeah. Aside from the SoFi stuff that we'll get into, everything good with you?
My setup looks a little different.
Yeah.
My main computer, I got to reformat it. Working on saving and backing up the data. As probably most of you guys know, I'm a PhD candidate, so I'm in the middle of my dissertation, about halfway through. All of that's on there. It should be backed up. I'm just wanting to be real careful with that. So we're just doing this setup, slowly back it up. I think it'll be done tomorrow, and then we'll be back to the normal next week.
It should be backed up.
Should be. I want to. There's 3 different places it's backed up, but I have lost everything before. Not in this phase. I'm not doing that.
Well, I wish the best for you. I also wish
Yeah.
that you had more confidence in the idea that it is backed up.
The great thing is, like, SoFi tanking is like, I mean, that happens. Versus like losing my freaking dissertation. Like at this point, that would be misery. So, and all the sources, oh no.
Tevis, what about yourself, my friend?
What was the question?
Just how you doing?
Yeah, good. Yeah. I bought more SoFi today.
Oh yeah, did you get it under 7?
I got it at 7. Well, actually, 6.99978 or something. So I guess technically, but I got it at 7. Yeah, it was great. I bought more last week. I bought more this week. I bought Tesla as well today, which was also great. That was like my first buy in like a year for Tesla, but it's back to that level. So why not?
Okay.
Yeah,
that's
I'm buying those both too. So bought those both yesterday.
I'd like to talk some Tesla in potentially the after hours if you guys are interested. But
love that.
Yeah, let's do that.
Somebody commented on my post and they were like, why are you buying? It's only going to go down more. And I literally felt like that meme, like that beat up guy on South Park. Like, I ain't hear no bell. Like, somebody in my chat was like, Tevis, is SoFi going bankrupt? And I just commented, I'm like, I'm going to go bankrupt buying SoFi before SoFi actually goes bankrupt.
Yeah, the other way around, eh?
Yeah, it's just, you got to buy. I don't know, man. Like when this thing went, and I said this in a video that I posted, earlier today, when this thing was at 10, I seriously had like reverse FOMO. Like I felt as though I was underinvested because they were firing on all cylinders. All vectors seemed positive with regards to profitability. All of the news, the top 5 bank that they're working with, so on and so forth. And so I'm like, oh man, I wish I had bought more at 7, but I just wasn't like, I didn't have the cash on me. And so now that it goes to 7, I'm like, it's back at 7. Can I get it at 650? And so I just bought at 7, 740. I bought at 7. I'm probably going to buy next week, whatever price it turns out to be at, because, you sort of become a hypocrite at that point where you recognize the emotional shifts in your own behavior. I saw sentiment so low this week, and we can talk about that. But
it's been unbelievably low, like $4 low, even though we're at $7.
Dude, I saw every single post that Anthony Notto is making. People were commenting like, can you comment to get the stock back up? Like, guys, stop.
Yeah, can you do what Carp did and trash these short sellers, please?
On sentiment, I was curious. And I read a poll yesterday because I'm like, hey, I've been seeing it really, really low for SoFi. Ended up that it was between SoFi, Tesla, PayPal, and Google. And Tesla, of course, crushed it with over half of the votes saying that people are bearish over the next 12 months. Most bearish on that out of the 4. And then SoFi was number 2. And it was close. Google came in, not too far beyond that. And then PayPal's going to move it up. So, but it's a lot of it's based on the price action. We can talk more about it. But I actually, just based on comments and who follows me, I was thinking SoFi might actually win that. So I was a little surprised. We'll talk Tesla later, though.
I saw that. I voted for Tesla. Yeah.
So,
Uh,
I mean, Tesla's down more than SoFi this year. I think that's the thing that should blow people. And I know this, we're not going to talk about Tesla this pod, but Tesla's down 34% so far this year. SoFi's down 27% so far this year.
And
So
yeah,
so you
I
think
would,
they need to even out?
I mean, either way, if they even out, I'm going to buy more of whichever one evens out.
PayPal looks fantastic compared to those two through the year. I'm just saying. I don't know. That's sad. That's not good. Not when the market's hitting all-time high. It happens. It's not. We'll get more into it, but yeah,
Dude,
sentiment just it acts like the price is $4. That Notto resigned. That they're having to secure loans just to be able to stay afloat and not go bankrupt. That's what sentiment feels like to me. So buying opportunity.
You know how they've been saying like go woke, go broke for Disney and for other companies. Now we're seeing it with Boeing, where every single week it seems as though a new flight, like pieces are just falling off. Yeah, Tesla's down more than Boeing is year to date. Like just take that in for a moment. The company that literally has pieces of their plane, like the wheels are literally falling off. Tesla's down more than they are.
I mean, I recently just did a comparison with Boeing and PayPal as well, because I think it's a good stock to pick on right now of like, this company should be down. But yeah, so what's it called? In terms of sentiment, the other day, I think it was literally yesterday, I did just a live stream on, guys, let's look at some of the greatest investors of all time. How do they stomach volatility? And I think that the way that everyone says the way that they're going to act while their stocks are falling is in like their stock market journal. They would write, review the company fundamentally. If nothing has changed, then it's a buying opportunity sort of thing. And it's just funny seeing what is the uh, hopeful action that they end up taking versus the thing that they're actually doing whenever in the moment. It's almost like that Mike Tyson quote of like, everyone's got a plan until they get punched in the face. I think it's crazy the way that people are talking. There are, I think, some real issues that people are having with this company in the last little bit, in terms of potentially interest rates staying up higher than longer. There are some things that you can point to in terms of potential stress on the business, but I think it's stress rather than dead company, dead money, all these sorts of things. I think it's a time to buy rather than a time to sell for my own portfolio. Like Warren Buffett says, I'm a net buyer of stocks, right? I'm not looking to find reasons to sell.
Yeah, the only real credible thing that happened this week, anyway, we talked last week about the offering and the reasons for that, so we won't go back into that. It's just the PPI came in, CPI came in, and they came in hot, so there's real concerns not only that we're higher for longer, which SoFi is fine. That's not an issue. It'd be better if it fell, even though bears were also saying, hey, if it falls, it's the end of the ropes for. So it's just, you can't win with some of those guys. But honestly, it's better if it falls for SoFi. But the real risk is if they raise interest rates.
Mm-hmm.
And I'd mentioned this jokingly, like, I don't know, back in January. I still think it's very unlikely that they raise rates. Very, very unlikely. But there's a possibility. And if that does happen, if interest rates, if CPI starts printing and PCI starts printing higher and higher prints, they'll have to at some point. I don't think that's going to happen, but if it does, that really, really hurts SoFi and other banks like that. Puts a lot of stress on them. Would lead to cuts eventually, but it would cause a lot of hurt.
Why? Like, they spent 2 years in a high rate environment. Why does that hurt SoFi? Like, they've proven beyond reasonable doubt that they can be versatile in any rate environment. And so, yeah, it's going to hurt several segments of their business, but it's not going to hurt their overall business. It's going to change their guidance, sure. But like, oh, we expected, lending to come in negative. Actually, rates, we got another hike and they're coming in positive. And plus, I don't think it's going to happen, right? Because first of all, the Fed needs to wait a couple of reports to lock in the fact that it's a trend, that it's sustainable. And by that point, we're going to be getting close to election time. And I guarantee you, with even Biden's comments around rates falling, like, nobody's going to raise rates. It's such a low possibility in my mind that they're going to get raised. maximum the cuts are gonna get pushed back, and like that's fair. I think one of the biggest reasons why people are getting discouraged now about SoFi is because it's relative to everything else that's in the market. Like everybody acknowledges that a good pullback is healthy after the run that we've just had, but SoFi has not had that run, right? If I bought NVIDIA at 300 and NVIDIA went in the course of 3 months, it went to 900 and then it falls back to, let's say 800 or 700, I'm okay with that because I'm still over 2x on my money. But SoFi started the year at 750 and it's like still at 750. And so I think that's the thing that like mentally messes with people's heads is the opportunity cost of their money. But that's where you get into like a swing trader mentality.
Okay, so I want to step in here for a sec. One, I also agree that I don't think that rates will get raised again. I think that it'll just be held for a very long time. I think that this is a pretty good rate environment. But also, I just realized that we have a special guest. So I wanted to bring them on. I've never met this person before. I know of them because they've been in the community for some time. I met him as a viewer, as most of you guys will right now. But I wanted to bring this person on because they are extremely large SoFi stockholder, and we'll learn how long they've been holding it for and why they've been holding it for. But I think that this is the perfect episode with the volatility of how does this person sleep at night. So, ladies and gentlemen, Josh,
How are we?
What's up?
First one, apologize for pulling a Tanner today.
Okay.
There it is. You fit right in.
Start off with that. Showing up, 12 minutes late?
Yeah. Well, hey, that is, I would never be that late. So you've got your own name now, Josh. I don't even know what you guys mean by late. I've never been late. I show up exactly when I'm ready. Okay. But thank you for being here so much, Josh. I been wanting to talk to you for a long time. So glad you're here. And you can show up at any time you want, dude. I really appreciate you being here. So
Appreciate the invite.
how many freaking shares of SoFi are you holding these days?
So I've currently got 150,000 shares, and roughly probably 2,200 calls.
Jesus.
2,300, somewhere in that ballpark, over 2,000. I've got 500 at the $5 strike for 2025, 500 at the $7 strike for 2025, and as of today, I have 500 at the 2026 strike. And then I've got a bunch just mixed up in between there. But those are my three largest call options that I currently have.
So basically, just your shares alone are over $1 million in SoFi at today's prices, let alone what it was at 10.
Correct. Yeah. I mean, I purchased the bulk of my SoFi investment back in the mid fours to low fives is where I got the bulk of them. My average cost is $5.31 in my shares, and my
Okay.
and my $5 strikes calls for 2025 and my $7 strikes, they were purchased at the same time I was purchasing the calls, so they're going to be in that same.
Tanner,
So that's the bulk. Everything else that I'm doing currently is more just speculation and a little more risk.
Dude, I was just, before you came on, Josh, I was just saying how I feel underinvested in SoFi, and then you come on with over $1 million in the stock, and you have a cost basis that's like $2 under my cost basis. I'm like, great, thanks.
Well, I've got to give it to y'all as well, because I had my own personal thesis. We're talking now a year and a half ago, and I had my own research I did, and I had my own thought process behind it. But watching this show, it's probably a little over a year ago now, watching all the due diligence done in regards to it, it helped build in regards to my own thought process and my own thesis. And in turn, I ended up, what Tevis wanted to do the other day, which is unload a lot of my other stuff and pretty much go all in on SoFi. So,
but you're pretty close though, right? It's what percentage of your portfolio?
Now, of my portfolio, it's probably only because crypto. I'm throwing in crypto in regards to my overall portfolio, but now it's probably down to only 75%, give or take 77%.
Okay.
but that's only because Bitcoin has went up quite a bit. So, and I've got a decent amount. In Bitcoin.
Yeah.
Why so little? No, I'm just kidding. That's awesome.
But I will say this. I will say this. I've been highly considering possibly trimming some of the Bitcoin that I currently have and adding it with the current prices, especially into SoFi. But I think a little bit of diversification is probably good.
Have you added to increase your average price since the $5+ ranges?
I've never added shares. No, I'm contemplating it now, but I've got about probably $300 collateralized in regards to selling puts.
Okay.
So I've got a decent amount of puts I've sold to the tune of roughly $300,000 in possible shares I have to purchase.
Yeah. So your SoFi portfolio has been hovering around $2 million or so, I think, if I remember correctly.
Plus or minus for quite some time. Yeah.
Which it's a volatile stock. So, but I like the screenshots when you share them on Twitter. I wish that you put your Twitter handle on or X handle on the thing, but maybe if you want to put it in the chat, we can throw it up on screen. That way people can give you a follow. But what is the exact DD that made you want to invest so heavily into SoFi back in the $5 ranges in the first place?
So what's actually crazy is I first purchased, my first endeavor into SoFi was back when it was trading right around $20 to $21. So at the time I had about, I don't know, probably 60, 70 grand in SoFi. It was a small portion of my portfolio at the time. And it ran up to about 24 and some change. To be honest, the only reason why I sold was because I felt there was other positions that I wanted to go into. So I ended up getting out of SoFi right around 24, made, I don't know, 15, 20 grand, give or take, at the time, and went into other stocks. And I continued to watch it. And I got back in when it was right above 10. Right when it hit 10 the very first time, right in that time period is when I started adding. And as I kept going down and down and down, I kept adding heavier and heavier and heavier.
Yeah, well, what was the reason for purchasing in the first place?
It's the growth. I mean, the growth, the business strategy, Notto as a whole. I mean, everything y'all have talked about on here over and over and over again is compounded over the years. Now finally getting profitability. I mean, everything's moving in the right direction. As soon as the fundamentals change, and I see something that gives me hesitation in regards to their actual growth, in regards to the fundamentals, that's when things will start changing in my mind in regards to maybe trimming or completely selling out. But I haven't seen that thus far. And nothing has led me to that conclusion thus far, which is why I'm not really making a big deal about the current prices.
Josh, with your position, do you have a price target or an exit plan in mind, or is it mostly like a long-term hold? You're not even thinking about at this point you'd sell.
So the 150,000 shares, my game plan overall is to hold those. I have no intention of ever selling those. I also plan on holding long-term my 2026 $10 strikes, pretty close to expiration, somewhere in that ballpark, and then I'll go from there. But as soon as SoFi gets up into the 12 to 14 range, sometime this year, when that happens, when that takes place, my plan of action is to then sell covered calls. I'm pretty much my entire position, but I probably won't. The strike price will probably be somewhere in the low 20s. And if it hits it, I'll take those. I'll take my shares off the table, and then I'll exercise my $5 and $7 calls, if that makes sense. So I'll just basically rinse and repeat.
Right.
So this stock right now, like we were talking about earlier in the podcast, the sentiment right now is extremely negative, and that's at $7. You had purchased the bulk of your shares in the $4 or $5 ranges. How did you look past all of that sentiment and all of the negativity to buy what has amounted to a great trade for you? But how do you sleep at night, with such a volatile stock?
Well, I mean, I would be lying if I said there wasn't days where I was, cringing a little bit. I mean, that's, I think everybody, doesn't matter what your size is. It doesn't matter, it's a portion of your net worth, everybody's. So, I mean, whatever your amount is really irrelevant, in my opinion. It's still that significant to you and your own portfolio. So, I mean, it's definitely heavy for me. It's definitely tough overall. But again, I keep going back to the fundamentals. I mean, at the end of the day, the company is still running on all cylinders. They're still doing what they're supposed to. It's still moving in the right direction. Just hit profitability. Going to have the second quarter of profitability right around the corner. Right now, just about what y'all were talking about most likely was, it sounded like you were talking about interest rate cuts. And I think that's probably, besides obviously the 750 offering they just did, the pushing back of the interest rate cuts is one of the biggest, I would say, concerns. But it's more of like, I think the market overall is basically saying, hey, look, we don't need to get into it now.
Yeah.
Closer to the idea or concept of the cut actually coming in June, which is what the current speculation is. When we get closer to that, or in my opinion, when we get closer to the next earnings call, because I think the next earnings call is going to be the stepping stone, if you will. It's going to be the earnings call, which beats expectations, and then that's going to turn right into the sentiment, which is going to be that CPI comes in lower, more on interest rate cuts, and that's what's going to start, in my opinion, our stair step, if you will, to higher price targets.
Do you think that because I believe that we would have seen a change in sentiment back in Q3 and then in Q4 from things like, consistently triple beating, breaking into net profitability. There seems to be this insane amount of high short interest or potentially a short attack on this stock. How do you see that as an investor on the opposite side of the trade with, the amount that you do? And how do you sort of look at that in general? Just the shorts betting against SoFi?
Overall, naturally, I dislike it. I think everybody dislikes it. But I think, again, I think the bear case at this point in time is just the concern of, a hard landing, the concern of higher default rates, the concern of higher for longer when it comes to interest rates and what that might possibly or potentially do to SoFi in the long run. But I truly don't think that thesis is going to play out in the long run. I think it's more of a short-term, win or gain from them.
Sure.
And I also don't think it's going to. I think we're pretty much at bottom right now where we're at. I don't think there's going to be much more pushing down. I think anybody who's on the sidelines that's waiting to get in, or big money that has had a overall smaller position than what they expect to eventually have, I think now's gonna be the time when they slowly start trickling in.
Let me push back on that a little bit. I think you're right. For the record, I went in pretty heavy for SoFi over this week, a little bit last week too, and I've been buying all the way through. But for me, not by your standards, I went in heavy. So I think we're at or near the bottom. But if this market has a major correction, SoFi is quite volatile compared to the normal market. I think we could get pushed down considerably further. Is that a concern for you?
Yeah, I mean, if the CPI continues to come in high, like it has the last two, which again, it's only a 3.2. I mean, we've came down quite a bit. If my memory serves me right, we haven't had a 2 handle yet on the CPI. So the lowest we got was 3.0, and we're at 3.2. So I mean, it's going up a little bit, but it's not. I don't think anybody's saying the sky is falling. Which Jerome Powell just literally said, a little over a week ago, that he thinks cut sooner is more likely than not. He's not having a conversation about raising rates. So as long as the next print can be 3.1, I don't think that's going to scare the market. I think if it comes in at 3.4, 3.5, even 3.3, that could potentially be more harm than good. But as long as it continues to go as long as the conversation continues to go to cuts rather than raising, I think that's going to be the biggest detriment in regards to SoFi.
What about in the sorry, Tevis, I just want this small thing in with the idea that rates just stay where they are currently. This is a 2-part question. Is that hard for SoFi to continue at this interest rate environment? And 2, if there is a cut in sight, where do you foresee potentially that we might see a cut?
I think June. I think June's going to be the cut, and I lean more towards the idea of a victory cut. And what I mean by that is just, I don't think the CPI is going to come in between now and June to an extent where everybody's going to jump up and down and say, okay, we've completely won. But I think this next one that's going to come out next month, I think it's going to come in lower to where the sentiment will change to, okay, we had a little tick up there, which was probably seasonal. And now we're back on the path of, slowly but surely going down. And I think, again, it could just be a quarter point, which in my opinion, in June, it will just be a quarter point. And they'll say, hey, we're going to be, data dependent from here on out. And they may wait for, 3 months, 4 months. But I do think June will be a quarter point cut.
And on the topic of how important is the cuts for SoFi versus if the interest rate stayed the same?
I don't think the cut, whether it's in June or July or August, I don't think them cutting is that detrimental in the long run to SoFi.
Sure.
What I think is detrimental is as long as the conversation and the narrative stays that the next move from the Fed is going to be a cut.
Okay. Because I'm just trying to pace like, you're holding on all these shares. I mean, we all are holding on to a lot of shares relative to our portfolio, but not to your level, obviously. But what would change the thesis, I guess, for your holdings currently?
So the thing that would change the thesis would be that, inflation comes in hot and the narrative changing to, okay, maybe we need to raise another quarter point or 50 basis points for that matter.
And that would get you to sell?
That wouldn't get me to sell all the way out. That would get me to trim. A situation like that, I would probably be prudent in taking any of my short-term calls off the table, number one. And 2, definitely trim my total position in regards to shares. Maybe go from 150 to 120 or 150 to 100, something along those lines. I would never. I have zero intention of getting out, no matter what interest rate does, unless there's a fundamental change in regards to SoFi itself.
Go ahead, Tevis. I just really wanted to clear that up because I think it's fascinating. You're a great guest, so I really appreciate you being here. So thank you.
I mean, look, the cost basis is so good, and you just said that you're not going to be considering cutting your position unless something fundamentally changes. So the only thing that rates would affect is the call options because those actually have an expiry date.
Yeah, and I've got probably I think it's 900 June calls at a $10 strike. Those right now are doing atrocious and horrible. So that would be the first thing I would sell. I probably wouldn't get much out of it. Probably 10 cents on the dollar. If that happened, but I would probably move those quickly. But besides that, the rest of my calls, I'm pretty sure are until January 25.
So let me ask you this then, Josh. Is your position fully, I know you sort of mentioned it a little bit before, but is your position fully built out at the moment? And at which point would you fully sell out of Bitcoin and just go 100% in SoFi? Like $6, $5? Like, do you have a sort of game plan around that?
Me getting, I will never get out of Bitcoin 100%. Never, not 100%. But for example, I've got the actual coin itself. I've got, I want to say it's six total Bitcoin, give or take. And then I have my MicroStrategies call, which is basically a proxy for Bitcoin. So what I would consider doing, and I've been debating this back and forth, which I would love to hear y'all's take. I'm very hesitant in regards to the idea that everybody has been front running the halving event when it comes to Bitcoin. Historically, when the halving event happens and takes place, that's when the price of Bitcoin proceeds to go higher. My concern or my thought process is that what is the probability or potential that everybody has been front running that and the actual halving event this time with the Bitcoin ETFs, that it's actually a sell the news event. That's been one thing that I've been considering. And ironically, I'm pretty sure the halving event is probably right around April 24th, 25th, somewhere in that ballpark. SoFi's earnings are going to be April 30th, give or take. So it's something I've been considering, the possibility of selling 20-30% of my entire Bitcoin position and putting it all into SoFi right before they have their next earnings call. Haven't decided yet, but it's on the table.
I mean, it's definitely interesting. The thing with Bitcoin that I always have to remind myself, and man, you know more than I do probably about Bitcoin, so I'm going to keep it brief, but is that the price never ceases to amaze me. So although this might be front running, is it front running if the price is going to head to 100,000 after halving? Like, I mean, this will look like a small blip on the graph whenever it comes to the run up after the halving, if that's where the price is
Well,
headed.
the same thing could have been said, if you look back, 2 months or a month, if you look back to the actual ETF approval, everybody was speculating whether or not the ETF approval would be a sell the news event. And in the short term, short term, to your point, in the short term, it was a sell the news event. Looking back, I mean, what was it at 45, 47? Mm-hmm. It's at 70 right now. So was it really sell the news?
My 2 weeks.
Exactly. But my thought process more than anything would be selling the news, putting it into SoFi. It'd only be a short-term play, basically just an earnings play, probably more than anything. And then take that exact same amount of money back out, put it back into Bitcoin.
Sell it before
it would never be a long-term thing. It'd only be short-term.
Yeah, I mean, honestly, if you sell it before 10 a.m. or whatever on earnings day, you're probably likely to make at least 10%. And then, if you forget to close it before close, then you've lost all your money. But
yeah,
historically, that's going to change though.
That eventually will change. The Bitcoin thing will change as well. I think, this time's a little different just with Bitcoin, just because it's the only time pre-halving that we've actually seen a new all-time high. That hasn't happened before. The ETFs, they're a major piece of that. And I'm seeing like retail interest pick up a little bit as far as Bitcoin, but I still think it's going to do the same thing, that after having that it'll continue to set a much greater all-time high. Maybe when halving is announced, there might be a pullback. I don't know for sure, but usually that next peak actually comes, or the new all-time high comes pretty rapidly after halving. Maybe we screw that up slightly, but me personally, I have a much smaller position in SoFi and also in Bitcoin than you. I'm just planning to hodl my Bitcoin at this point and not sell any of that. I've got some miners; those I trade in and out of, but that's smaller relative to what I have there. So yeah, if I was in your shoes, I would just keep the Bitcoin and let it run. So it is tempting though, just because of the pattern with SoFi. They're going to triple beat. It's smashed down to nothing to make some short-term bets. And yeah, I get it.
Here's the thing with regards to Bitcoin, and we can pivot off this and go back to SoFi. But the halving, at least in my opinion, it's more like a psychological event, or that's been there. Because retail has been the main audience of Bitcoin up until this bull cycle. This bull cycle is unique because for the first time, institutions are going in heavy. And the reason why Bitcoin hit an all-time high pre-halving was as a result of these institutions. And those institutions that are running these spot ETFs, they're not going to be the ones to, completely dump all of their Bitcoin holdings and crash, the stock at the halving. They're not trading the thing. They've been accumulating like more than the float on any given day. And they're not showing any signs of slowing down or stopping because they just have this massive size. And relatively speaking, Bitcoin is still fairly small in the grand scheme of things. And so, yes, I think institutions have been the amplifying effect that has sent Bitcoin so high pre-halving. And yeah, sure, we might get a pullback on the actual event because there's going to be plenty of people selling the news, but mostly retail. Institutions are just going to keep chugging along all throughout because they're trying to build core positions. And so I think in the long term, like 2025 is still going to be better than 2024 and so on and so forth. Like we will see the same cycle repeat on the back of institutions just accumulating because they're building a position for the first time. And many retail have gotten in at Bitcoin of like, much, much, much cheaper prices.
And I don't think the halving is just a sentiment change. I mean, it lowers the rate of essentially inflation on the available coins, right? So I know that it's 21 million coins maxed, but there still is 900 new coins that are coming onto the market every single day. And so, you see people monitoring how many coins that the ETFs are buying that are taking away from that new pool of Bitcoin. But whenever that drops down to 450, that is a significant change in people's opinions on it as an asset. I think that the halvings actually do matter, especially after multiple over time. But yeah, I don't trade very often on the short-term news. So I'm going to defer to you, Josh. And obviously you've been extremely successful in what you're doing. So You're probably best at this, but
what I will most likely do, to be honest, is I probably won't touch my actual Bitcoin, and I'll probably just sell a covered call on my one MicroStrategy call that I currently have at a substantially higher strike price, and just use that money to then play the short-term SoFi earnings play.
Gotcha. So do we have any other SoFi specific questions, by the way, for Josh, or whether it's news this week as well, Tevis?
I mean, we could talk about news. I think the main two pieces of news were, number one, Aaron Webster, and then number two, the short interest for the end of February. Sorry, Roy, what did you want?
No, that was it. Aaron Webster. That's go ahead and launch that, and I'll jump in on that too.
So Aaron Webster was the chief risk officer at SoFi. On February 7th, he was replaced by a gentleman called Arun Pinto, who came from Wells Fargo, had previously had JP Morgan experience for 9 years as well, who was the chief risk officer of both of those legacy financial institutions. Aaron Webster was then moved to an EVP position, executive vice president, so not C-suite. So he was basically demoted, for lack of a better term. And 1 month later, on March 6th, Aaron Webster resigned from SoFi effective today. And this Wednesday, on March 13th, PayPal announced him as an executive vice president. Alex Kress even tweeted about this as well. So, yeah, PayPal was up on the day on this news. And it seemed as though it was fairly amicable, I guess, with SoFi. But, I mean, how amicable could it have been, given the circumstances?
Yeah, real quick, I would say PayPal was not up on the news of this at all. It was because of the CFO presentation on Wednesday. So that was Jamie Miller killed it that day. This is the PayPal Weekly, so I won't go too much into that, but it's good for PayPal. This was, yet another edition for PayPal. They've basically not just rearranged the chairs on the deck, but there's been a qualitative change with the leadership, and they've pulled talent from all over. It's kind of understandable with Mr. Webster here that he was demoted. He's looking for something else, and PayPal offered him that. My concern as a SoFi shareholder, because I've heard rumors of this happening. You never know exactly the reason why people move and shift from companies. But SoFi is a company that uses a good bit of stock-based compensation. And when employees are offered stocks at a certain strike price or even at $0, but they think that there's just not going to be much capital appreciation there, I've heard that they are more likely than not to jump ship and go somewhere else where they just see a better opportunity versus if, SoFi was at like $21 and just like basically it's doing Robinhood right now. I don't know how much of a concern that is, but I do know, with the three main C-suite executives, especially Anthony Notto, they have these PSUs that are based on the stock price. Is there a case that if SoFi continues to remain lower for longer, that you fear, especially Anthony Notto, would just jump ship and say, hey, I'm not going to get these PSUs anyway. I'm out of here.
I'll answer this first. I think honestly, for Anthony Notto specifically, I think it's a good incentive. I don't think it's his driving force. I truly think he's looking to make legacy, not looking to make money. Especially at his net worth. I mean, what else does he need to buy? But yeah, I mean, I don't look at it as a real concern. And also, I don't look whenever these companies are starting to acquire, especially PayPal with all new management, that this looks like pain towards SoFi. They've been acquiring people from Cash App. They're acquiring people from SoFi. They're going after the fast-growing, exciting companies to try to gain a share or the brain share of those companies, right? Understand why these companies are doing so well and try to reinvigorate PayPal. I don't look at this as a pain towards SoFi at all. He could potentially being overpaid. We don't know the actual details. So, yeah.
It's an interesting way to put it, Tanner, because PayPal is getting somebody from an innovative company like SoFi, and then meanwhile, SoFi replaced this guy from somebody that's coming from Wells Fargo. just for their banking side in general with regards to risk. I think it's relevant to that role. I think to Roy's question, I would ask a different question: is would Notto still be there if they hit the highest tranche of those PSUs? And I'm not sure, right? 400 something million. So I mean, look, the fact that they even have PSUs, it incentivizes them to get there. I think just that alone, like he's basically going to be there until mid 2026, guaranteed, just to see that through at the very, very least. If it doesn't hit, then probably the board is going to incentivize him in some other way. Anthony Notto has not really hinted at anything with regards to leaving the company. But the more interesting point is if they do hit, and especially if they hit like in a big way, and in a big way, I mean the highest tranche, would Anthony Notto then leave? Because at that point, what else is incentivizing him to stay? Unless the board doesn't make another, compensation plan for him or something to that effect.
I think it's a good point on the legacy he seems like that's what he's trying to build.
Agreed.
So, and that's a reason to stick around. He has his plan. It's a number of years out. At some point, he'll have enough money and he'll be like, I want to spend, I don't know if he has kids or grandkids, but, he won't want to spend it all his time, combating short sellers and on being on Twitter and going on interviews, as fun as that is. But I think we're not near that yet. So I just throwing that out there. What do you think, Josh?
You could say the same thing about any, long-term CEO of any company. I mean, that's always a concern, but the reality is that I think a lot of them, when you get to that level, they care more about their legacy and their long-term, status, if you will, in the community more than they care about the actual financial side of it.
I wanted to add to that as well. One of the podcasts that Anthony Notto was just recently on with Kathy Wood, whenever talking about SoFi, he originally said that he wasn't actually looking to be in the CEO role of a company right now. And then he thought about his own brothers, which, attached that to a lot of meaning in his life, as why aren't they living the life that they thought they would, even though they're making $400,000 or $500,000 a year and they can't live the American dream. So he looked at it as, SoFi could be this next new Amazon for an industry that hasn't been touched yet by a true innovator. And he thought that he could make real change. That does not look like someone who is looking to make a fast dollar, right? He's looking to really, make change. If you follow him on Twitter or something like this, he tweets about SoFi, but a lot of the times he simply tweets about the financial health or financial education of American youth and these sorts of, I think he's very passionate about the topic overall. And I don't think that there's a role better than this or in any other company that would have as large of an impact that SoFi would right now.
And college football. He likes that too.
Well, yeah.
And lacrosse.
These types of people, and I'll draw parallels with Elon to some degree because they have deep pockets and they're really capable and really smart and highly desired in these different types of companies in executive roles. And as a result of those two things, these types of people have unlimited options in terms of they can do whatever they want. If they have a pet project that they want to start, if they have a passion, if they have a pursuit, if they have, freaking Elon is building a robot that can walk and talk, and who would have thought? Yeah, sure, it's cool for all of us to think about to do something like that. But those types of people actually have the capabilities to do that. And so I think for Notto, yeah, this is the most interesting thing that he can do today. But in 2 years, 3 years, 5 years, when, let's say, he cashes out, that could be seen as a win, sufficient enough for him to leave. I'm not sure. But he'll have unlimited money, unlimited opportunities, and he'll have a reputation now for having had turned around businesses. SoFi pre-Notto was not the SoFi that it is today by a long shot. And as a result of that, he basically opens up the playing field to do whatever he wants to do because of that gained reputation and because of that gained capital. And you'd be a fool if you think these people have one passion in life. They're so they're polymaths in so many ways where
I think you're giving him
Well,
I
no,
think you're
hold on.
giving him way too much credit. He's
Not just him, dude. Every executive that's in his position would not have gotten to their position by not being that way, by not being capable and multifaceted.
I think if you look at his track record, he's a decade and a half long employee at Goldman Sachs. And whenever he's not at Goldman Sachs, he's a chief financial officer. The dude's a finance junkie, you know? I think he's placed I don't think he goes into robots. I think he revolutionizes finance. That's like, I think everyone's got their role. Elon's an engineer. I don't think Notto wants to build electric cars.
I'm not saying that he's going to become the next inventor of our generation. I'm saying, look at the companies that he's worked at. First of all, West Point, highly demanding, high discipline. Goldman Sachs, he got the entire playbook on Wall Street. And then what did he pick? He picked Twitter, which at that time was like one of the up and coming social media companies, fastest growing. And then he picked the NFL, which, I mean, you can still see him tweeting about that today. So that's exactly my point. Like, if you look at a social media company, a sports organization, and then
CFO.
Okay, sure, COO, CFO. It doesn't matter what role he does. My point is the sandbox that these companies are playing in are very different. Social media, sports organization, fintech. Find the common thread that crosses all of those. It's just one person, right?
Balance sheet, big balance sheet.
The real question in that is, do any of us feel or believe as if Notto will leave SoFi prior to putting a stamp on his name? I personally don't.
Yeah, no, I don't think so at all. If I'm wrong, and if he is leaving, it's time to reassess. I mean, he is a big part of my bull case, the management ultimately, and Anthony Notto is phenomenal. We saw, just a lot of these stocks can move dramatically when the C-suite exec, the CEO, leaves, especially if that's a big part of the bull case. So most recently, that was a Snowflake, and Frank Slootman there leaving. The stock dumped, and it's still dropping. I think that the new CEO, we won't go into it, but I think he's very good. But and there's issues with Snowflake, but a lot of the bull case there was around one man. And that's what we have here, frankly, at least from my perspective in SoFi. I think they'll be fine if Notto leaves, but I don't think it's happening. I think it's like less than 1%, way less.
Did you guys see this Alan Kowalski tweet that ended up happening this week? So I had not heard of this guy. I started doing just a little tiny bit of due diligence. He runs a fund. He's very much into the banking side of the world, helped get out New York Community Bank, he's working right now on New York Community Bank, trying to get them out of their terrible situation. He's done a lot of work for different banks on different boards and such, but only a little bit of due diligence have I dived into him. But under one of the SoFi posts where people are talking about SoFi stock, he had an interesting tweet that he put out. I want to share that with you guys because I thought this was very interesting. In my career, I've worked for some pretty successful people. Notto is one that I would have followed into gunfire. Sorry, that I'd follow into gunfire.
Yeah,
even Notto then praised his message, but I thought that this was a very high praise from someone who obviously knows Notto quite well. Did you guys see this at all? No?
Yeah, I saw this. I think like just to wrap up the Notto piece, because people are like, oh, why are you even mentioning that Notto could leave? He definitely is very mission driven, especially when it comes to this company. There's a reason he picked this company, and he's reiterated time and again, top 10 financial institution. I think whether the PSUs or if the PSUs hit or if they don't hit by that certain time, I think that's the mile marker that Notto is going for, and that he wouldn't leave until that mission is fulfilled. After it's fulfilled, my opinion is that he can leave. All bets are off, but we'll have made so much money by that time that, we won't really be, it won't be forefront in our mind. It could be like a long time from now, years.
Josh, I've got a quick question for you as well. You have a sizable position in this company. At what point does the stock need to drop to, hoping that all the fundamentals stay in place and the thesis stays the same? When are you going to start acquiring more shares?
I'm constantly adding more shares. I'm not shares. I've been adding calls. But that's for the most part. That's what I've been adding. Most recently is primarily calls, and I've been doing it on a safer side at the 2026 January strike, January 26 $10 strike. That's what I've been adding more predominantly.
And do you have any predictions at all on the company, or what you'd like to see for, let's say, Q1 or 2024 in general?
I'll give you a prediction. My
Sweet.
My prediction, and I'm probably not smart for saying this because I'll probably get ridiculed, but my prediction is from now through the end of the year, SoFi's weekly end will not be lower than what it is today. From now. SoFi will not be lower at the end of the day, weekly, for the rest of the year. That is my call. That's my prediction.
I like it. Bold, man. Even if not true, I don't think it's going to go down much, barring the macro being just completely shot.
But in all reality, in all honesty, I do believe that if you watch CNBC, if you watch anything, that no one's barely even talking about this company. It's not even. I mean, what was the last? We got 75 largest bank assets under management. I think is what it was, 75-80.
I think so. Yeah, 75.
So I mean, we went from a nobody up to that level, and we're still 2.5 years into having a bank charter. I mean, where are we going to be a year from now? Where are we going to be a year and a half from now? 2 years from now? Once something along those lines, once that growth really starts happening, the stock price really starts moving, you really start getting some serious conversation, kind of like what's happening right now with heavily in Palantir, and also what's happening currently in Robinhood. Once you start getting that type of momentum and that type of conversation, and people start waking up and start realizing, hey, what is this company's true potential? What can they truly become? We're looking at them now, and they've only had a charger for 3 years. What can they be 5 years from now, 6 years from now, 7? And that's why I think you really start getting that real traction and that real momentum.
What do you think about the conversation that people say that this is going to get priced like a bank? No matter how big they get, people are going to say that the PE ratio is too high, and that people need to start looking at it more the way they're looking at Jamie Dimon JP Morgan.
I think those people are correct, and they're right today. Once that traction starts happening and people start waking up and really start realizing, I don't think there's as much deep diving analysis from the big institutions as much as some other people do think about it or do dive in. And I think really once everybody starts waking up and realizing what SoFi is truly doing, and the real disruptive tech and innovation that they have, and they're bringing to the table, and the growth that they have for a bank, and then they start having the conversations like, hey, look, if they can keep 4.6% APY, even when rates start to drop back down into the, lower than what they are, one point lower than what they are, and they can keep it that high, you have a lot of conversations when you start talking about, hey, do I put my money in a stock that pays me dividends, or do I just put it in a savings account where I can't lose a penny and I get 4.6%? I mean, you're going to have a lot of traction as rates start dropping, and SoFi continues to hold as high as 4.6.
But we may have to wait a quarter or so to end up seeing that result.
I'm okay with that.
Okay.
As far as that valuation, like if it's being valued like JP Morgan, then we're 25% undervalued right now based on price to book. If you're going to value it like a bank, that's just the way it is. And yeah, I know JP Morgan has a lot more going for it. SoFi has a growth rate going for it as well. So if people are going to throw out that argument, just like, hey, where we're at right now, we're undervalued, then 25% upside. There's a lot more, by the way. It's not just a bank. We know that.
And there's barely even any tech conversation into valuing SoFi on top of that. So I mean,
practically none.
Yeah. Well, I mean, what was his name? Bruce, or not Bruce, but I mean, once you start really having those type of conversations where tech starts getting involved into the valuation conversation, I think you're
talking about Gary Gordon? Is that
Gary
who you're talking
Gordon? Yes, yeah.
I think I'm gonna have another conversation with him tomorrow. So
Don't be so nice.
I mean, honestly, I might not have to, because I was talking to him recently, and I think he can take a lot of criticism. So I might have to pull up with the numbers. But yeah, we'll see how the conversation unfolds. He put out another article saying he doesn't like the company after looking further into it. No tech conversation still, but yeah. I want to wrap on one last thing, if that's okay with you guys. I recently did a video on BMO and Truist financial, or Truist and BMO's estimates on SoFi. I was looking through some of their things, and I saw some pretty interesting predictions that they had with SoFi's metrics. Did you guys see this video, by the way? It was like a very popular stream of mine. It got a lot of traction, so I appreciate the viewers. But let's take a look. Truist, okay? They look at all these different statistics, and based on whether you're looking at net income, which they're only saying is going to grow by, a little less than 15%, but they're basing that on SoFi's guidance right now. Even though it might be sandbagged, that's fine. Net income a little bit lower than what SoFi is saying, but still within their guidance. EBITDA, all that stuff, all within guidance. But Tevis, look at this. Look at member count. At the end of 2024, they think SoFi, I think they're at right now about 7.55 million. So they're saying about 1.2 million new member adds in 2024. We're doing, like Tevis predicted this year, we're going to do 1 million in a quarter.
Yeah, like I think this year is going to come in at like 2.5, if not, much more. I don't know how they're going to do 1.2. That's like what, half of what they did last year?
Yep. It's half of what they did last year. And now look at this, Tevis. Look at deposits. We're at 18.5 at the end of 2024. They think they're going to go up by 1.2 billion additive deposits.
It's going to be like next quarter.
Yes. Next quarter, we're expecting over 2 billion. By the way, SoFi's guidance said 2 billion plus deposits every quarter. So SoFi's guiding for 8 billion more deposits. They're saying 1.2 billion.
Well, yeah, it's ridiculous.
I think SoFi's going to pass their 2025 deposit guide, in this quarter.
Yeah, bookmark that. Do a video when they do. I think you're right. This is like SoFi guides conservatively. I don't know what they're smoking.
So
this is not right.
Here's the funny part. This is one of the most bullish analysts for SoFi, and they have a $14 price target with all these numbers, members being less than half of what they were last year, deposits being less than half of what they add on one quarter. They're expecting that for the full year. They're basically saying this company is going to go on vacation for the remainder of the year to basically hit these numbers. And they still have a $14 price target on it. That's double what the stock is today.
And even net income and stuff, like whenever you look at this right now, GAAP net income, 98 million. That's even below SoFi's mid guidance. So they're saying, 95 to 105, about 100 in the middle. And then I have another statistic that they showed on their report that this is Wall Street's consensus for 2024. So across the board, even at the $14 spot, their net revenue is lower than Wall Street's, even though they have a $14 price target. And then look at GAAP net income for Wall Street. 87 million is the expectation. SoFi on the bottom end is guiding for 95. Look at the sandbag that SoFi Wall Street analysts are giving them. Incredibly low.
And then total sense if SoFi had always guided aggressively and had missed it more often than not. It's the opposite.
And then look at this. Take a look at BMO now. So BMO, $9. Not quite the opposite side, mostly actually in the middle of the guidance. Still up though. Like guys, we're talking about the stock is at $7 today, going to $9. That's still a pretty decent return. What is that? 20 something percent, or a little bit more than 20 or so percent. So still good return, and yet they're on the lower side of the guidance. And look at some of their expectations, like right here, preferred interest, the amount that we're paying. They're guiding that SoFi is going to continue to pay out the things that we just got rid of. I don't know if I'm reading this wrong, but the preferred interest has gone away now that we use the convertible notes to get rid of those payments. And yet, they even say it in the report. This report was after the convertible notes. They have stuff in here that makes absolutely no sense. Non-interest revenue. So this is the part where SoFi makes money from anything that doesn't have to do with loan interest or anything like this. So interchange revenue from people paying with, sorry?
That's been going down quite a bit.
Sure. Yeah, but Tevis, let's add in some things, because let's not get confused, right? It's gone down because the main additive to non-interest revenue is selling loans.
Yeah.
Okay. We didn't sell very many loans in 2023, so the price had gone down a ton. But then look at BMO. So if you want to say, hey, they believe we're not selling loans, what the heck are you saying with the cash and cash equivalents here? We're going from 3.6 to $10 billion. Where the hell are we getting this money? So they're assuming we're going to sell a crap ton of loans, I assume, unless we're just finding money out of nowhere, which why put a $9 price target on that? So they're assuming a crap ton of loan sales. Financial services, which is going to be the fastest growing segment, growing at 75% this year, is going to contribute non-interest revenue at a massive rate. And yet, I think SoFi, I'll make a prediction here, will have more non-interest revenue this year, in 2024, than their predictions for 2025. Over 905 million.
So look at their net income. Like, net income seems to be fairly in line with what SoFi themselves.
That's strong.
And then EPS, sure, still fairly in line. SoFi, I think, was expecting 8 cents. They're coming in at 7 cents.
Well, SoFi said 7 to 8, right? So
right, and these guys have a $9 price target, whereas the previous one you showed us has a higher price target. And look at their bottom line, right?
Yeah, 98 million.
How do you have a $14 price target with 98 million in the bottom line, and then the other one has a $9 price target with 118?
Well, because I can answer that question with 100% certainty. So 118 million net income, that was strong. $10 billion of cash doesn't make any sense unless you're selling a crap ton of loans, and only $4 billion of additive deposits. So those were a couple highlights I wanted to show off. But yes, you're right. So with the $9 price target, this is also something I talked about. They're expecting 7 cents of EPS, and the next year they're expecting 23 cents. Okay. So about a little bit more than a tripling year over year. This is actually lower than Wall Street's consensus. I'm going to show you that in a second, but it was 25 cents. Okay, so it's a little bit higher. The problem is they think that the valuation on the company is going to continue to go down. Look at this PE ratio that they're expecting for SoFi in 2025. A 13 times PE ratio. So that's why they're giving it a $9 price target. They're saying, hey, the growth is going to be great, but people aren't going to be willing to pay for it. My problem with that is look at the 2026, the year that they're not talking about. They're saying between 55 to 80 cents per share. So you're saying if they're giving up, or they're going to get 23 to 25 cents of EPS, right? In 2025, the next year it's going to be more than double that, or on the high side, more than triple that. And you're going to give that a 13 times price to earnings ratio.
Yeah, and then also the fact that if you go back to that table, Tanner, so they're expecting 7 cents in 2024, and then they're basically expecting it to triple in 2025. And then if you go by SoFi's own numbers, they're expecting that number to triple in 2026 again.
Yeah, that's what I'm saying.
EPS just skyrocketing all the way through. Even if you forget about the PE ratio, because they don't have a PE ratio for 2026 there, but just going by SoFi's own guidance, which, by the way, the most bullish thing about this whole thing is that SoFi's own guidance doesn't even account for all of their expansions, all of their new product lines, all of their initiatives from now until 2026. They're just saying, hey, if we just went on autopilot and did whatever we've been doing so far, and we don't compound that growth even more, like that's where we're going to get to. But even right now, like this NBA deal, geographic expansion on the horizon, a lot of the product expansion is still yet to come. A lot of the Galileo is still yet to come. So it's just incredibly conservative from these institutions, and they still have a higher price target than what we're trading at today. It's ridiculous.
So this is one thing. So you said they don't have a PE ratio for 2025, but let's say at 2025,
26.
What?
For 2026.
Sorry, 2026. For 2026, assume that the price is the same. Just divide the PE ratio by 3 times. You're talking about a little bit over a 4 times price to earnings ratio for a company. Like, okay, so then that's fine. You can pay 4 times for price to earnings ratio if the company then ends up, zero growth or even declining growth. That's still not in the guide. We see 20 to 25% EPS growth beyond 2026.
Right.
So that does not make any sense.
That's like on a consistent basis too. Basically what we're saying is, Josh, you're going to be a very, very wealthy man.
Yeah.
Very soon.
I hope you're right.
Can we, I know we're over, but I sort of want to just touch on one more topic, if that's okay, and get Josh's take, because we don't have many opportunities to have him on the channel. Short interest. Right now, it's been going up 17%. From a lot of the reports that I've been seeing from these paid services, they're even saying it's going to break a new record the next time it comes out. It seems as though institutions are toying with the stock somewhat. It's been bouncing around in this channel from 10 to 7. What do you make? Like, where's your head around a potential short squeeze or anything to that effect, with the short interest still climbing despite the company having that profitability in the bag? The next quarter is going to be a confirmation of that trend of profitability. So more data that Wall Street can then plug into their models to basically say, oh, wait a minute, this company is going to be consistently profitable. Obviously, that hinders the short thesis. Institutions we've been seeing have been loading up. We've been seeing 13Fs coming in over the past couple of months. That hinders the short thesis. And yet, despite all of this, short interest is probably going to be like 20% or higher the next time we see it. That's at least my prediction. 17% currently. Josh, what do you make of all of it?
So the last I saw is, I want to say Ortex was reporting like 172 million shorted. So it's definitely, it's probably closer to 19 if I had to guess. And that's currently. Now I don't know how accurate that data is, but it's definitely based on what I've watched over over a decent span of time. It's pretty close. I mean, it's not like it's in left field. So I definitely feel like they've been adding to that more than anything. But I think if you go in and look right now for next week's heavy put and call, it's at 750. I'm pretty sure on that. So it wouldn't surprise me one bit if next week we finish 742, 744, 745, somewhere in that ballpark. But what I think is going to happen, and again, this goes back to my prediction that this today's closing price of 703 will be the lowest for the entire year. But I think what's truly going to happen is I think from now until I think the next CPI report is April 10th. I think from now to April 10th, you're going to have a slow and steady grind. I don't think it's going to be anything shocking or amazing. It wouldn't surprise me if we're talking April 10th and we're still in the 7s. That wouldn't surprise me one bit. As soon as that April CPI report comes in and it's 3.0 or lower, you let it come in with the 2 handle. I think that'll be substantial, and the entire sentiment in the market starts changing to more of a definitive June rate cut. And then you have that combined with the concern of a surprise earnings beat, raise, etc. I think we're going to have a slow, steady grind between now and earnings. And it wouldn't surprise me one bit if post earnings we're going to be sitting above 10. Like that wouldn't be a shocker to me by any means. Whether we'll hold it or not, different story. I don't know. I would think so because again, there's no more concerns about whether the business model is proven or not. Because that's been historically the biggest concern is, hey, it's great you're doing it, but you're not profitable. Okay, you're profitable one quarter. Awesome. Are you going to be consistently profitable. And I also think with everything going on, along with the money that Notto and team makes, I feel as if there's going to be a point in time when they stop being so conservative on their guidance, and it wouldn't surprise me at all if it's if they have the conviction on this on this next earnings call, first quarter 2024, if they have enough conviction, not only on the success they're having EPS wise, combined with more of a conviction in regards to lowering of rates, it would, in my opinion, especially with the short interest that you're referring to, it would be a phenomenal time to go ahead and say, hey, we're raising our year-end target instead of 7 to 8 cents, we're raising it to 12, 14. I think something along those lines is definitely feasible. I'm not saying it's going to happen, but you let that combination of events take place, and I think we're all having a completely different conversation 2 months from now.
I think 12 to 14 cents of EPS is probably exactly where SoFi is going to come in for the full year. I think that it'll be a series of raises throughout the year, similarly to what they did last time. But I do agree that they have stopped sandbagging. Like, I think their expectations for 2026 are their legitimate expectations, rather than what we're seeing for the full of 2024, which I do not think is their actual expectations. I think they're conservative to make sure that if things go wrong, that they don't have to revise.
Yeah, and they could very well be the legitimate expectations for 2026, but they don't account for all of the initiatives. And what have we learned with the news that Bender 9000 found about the top 5 bank? This has been something that's been in progress since 2022. The NBA deal likely in progress for months, if not a year, before it actually happened. All of these initiatives that we're finding out about today, they've been started in 2022, 2023. And so feasibly, you could extrapolate to say all the initiatives that we're going to be finding out about in 2026, they're probably starting to action on today. And so SoFi,
I think it's the new segments that they're not accounting for. I don't think that they said that they're not accounting for new deals or initiatives. I think it's the business accounts or insurance or these sorts of things is what they said that they're not accounting for.
Right. But them, like the executives themselves, could very well be planning to roll these things out, and those things will materially boost their estimates for 2026. So you could say, yes, it is an honest reporting of what they expect in 2026, but they themselves know that if they roll out business accounts, if they roll out all of things different new product channels, that they're going to come in and beat even those estimates.
Is there any other things that you guys want to talk to, or should we wrap it up and head to the after hours? It's quite an extra long episode this time.
We can maybe just do like a 1 minute response on this. I saw several people asking about this. So this week, Karp, the CEO of what company again, Tevis?
Some company, I don't know. I don't pay attention to
Palantir, that's it. Yeah. I think he might have sold out. But anyway,
18, 16?
There was an interview that he went on with CNBC. And Sarah Eisen asked him a question, and he went on this rant, tearing into short sellers. Elon Musk, of course, is known to do this many, many times, loads short sellers. There's a question that several people were asking is, do you think Anthony Notto should address the short interest or short sellers? And if so, how? So why don't you guys chime in? I can share my thoughts, like just real succinct.
Look, all I can say just to start this off is, cocaine dealers probably love SoFi short sellers right now. They're their best customers with what we've been seeing in the stock action so far. So, look,
demonetized, not really.
I'm sorry, Tanner.
My take, honestly, is it doesn't matter to me if he addresses the offering, whether he addresses the short sellers, or he explains the offering more in depth. I would just like to see him come out addressing one of those variables. It doesn't matter which one of them it is, whatever he deems to be more important, or even if he doesn't address anything and he just buys shares, that will work as well. But I would like some sort of response with everything that's taking place. I don't know if he's still in a quiet period where he can't talk, or he's not allowed to buy. I don't know if there's any parameters in regards to that because of the offering. If there's a 5-day time period, or I don't know that aspect of it. But I would like to see or hear some response, some comment, something in some way, shape, or fashion from him. Yes.
So the quiet period should be in April because it's from the time the quarter ends until it's reported. And Q1 ends at the end of March, and it's going to be reported April 29th or something. So entirety of April should be the quiet period. I agree with you, Josh. I think that, he should come out and have some type of signal. In the past, this has been him buying the stock. I don't necessarily love when CEOs directly talk about their stock price or address short sellers. It sort of shows that they're focusing on the wrong thing. But sometimes, Elon has done it before. He literally put out a product line of shorts, bright red shorts. Carp, I think he fired up his entire retail investor base by doing that. I don't think it was necessarily a bad move. It's just bad taste sometimes, especially the space that SoFi plays in. They need to have, somewhat good relationships with these financial institutions, these banks, the people that they're rubbing shoulders with. Anthony Notto putting up a double middle finger to, the institutions is basically him doing it to his old pals at Goldman and the same people who are taking them up on their convertible notes and these types of offerings. I just don't think that SoFi is in a place that they can do that right now. Palantir has done it in a position of strength when they're at, $25 or whatever. They would never have dreamt of doing it at $6 or $7.
Sorry, I really like this tweet. As if I've said anything in the last couple minutes.
I don't think Notto is going to come out and say anything as brazen as Elon or as Carp has. But at the same time, he also, the stock price hasn't, 4, 5, 10, 20x either. So no CEO is going to go on a limb and make some sort of comment like that until they've actually have proven success.
I agree 100% with Tevis. You know what? I think it's the market that he's in. He's not going to say anything. He's not looking to turn regulators against himself. He's not looking to turn financial institutions. Remember, they partner on a ton of deals on the back end. They create syndicates to help with IPOs. He's not looking to make any enemies. I think the days of, who was it? Bill Ackman and Carl Icahn going at it, financial institutions sort of battling it out on the air. It's like that was a once in a lifetime thing. I think that the way historically Notto has spited financial institutions, there was a time where he shorted Goldman Sachs publicly, and there was a time where he bought SoFi stock publicly. He hasn't addressed share price. He doesn't do it very often. And in fact, he won't even come on this podcast. And this is investor relations directly saying, because we are too stock focused. Okay. So they are playing in a different world than the freedoms that other companies have. SoFi is looking to be in great favor with financial institutions so then they can get into small to mid-sized banking. Okay. They don't need any red targets. So that was a great point, Tevis. I just wanted to highlight that.
Yeah, I completely agree with you guys. I think it'd be a mistake to address it. Different business, not from a position of strength. I would just prefer him to say, hey, by buying shares, he's essentially saying, you want to sell SoFi? Fine, do that. I'm going to buy it. Enough. That's enough.
Yeah. And I think people look at the shorts as Notto buying shares as an instrument that hasn't worked, but that shouldn't be why Notto is buying shares. Notto should buy shares so then he has a larger stake in the company, so then he can advance his portfolio the same way Josh is doing it. So, I think if he wants a better stock portfolio and thinks that SoFi will be that instrument, buy more. Are we all ready to go? Josh, stick around for just a second.
Sure.
But ladies and gentlemen, thank you all so much for watching. If you guys enjoyed, you guys can subscribe down below. If you want to support the channel, you guys can hit the join button, become a member. I think it's $5 a month for both me and Tevis, depending on what channel you're watching on. Join there to see the After Hours show. Thank you guys so much for watching. Bye for now.